both developed markets and emerging markets. And so I think that kind of that last slide I presented and the two before that don't really make sense taken together. On one hand, incredible growth story, huge opportunity. On the other hand, there's not a ton of investors in these markets. And so the question is why? And we think that the traditional investment structure doesn't necessarily work in these markets. And so the way we've designed OBOR has been very, very intentional to address some of these issues. So I'll run through a couple of these strategic choices. The first is that we're a permanent capital vehicle. And there's a couple reasons for that, but the main one is that exits, attractive exits in these markets still can be hard to come by. You know, capital markets are improving, there's more liquidity, there's more sophisticated investors that can value future growth. But for the most part, it can be tough at times to find attractive exits. And what we've seen from more traditional investors that have your 10-year closed-ended fund, they reach their arbitrary liquidation date. They have to return capital to their limited partners. And so they can't find good exit options and they end up holding fire sales and actually destroying quite a bit of value. And that's actually how we entered a couple of our investments at what I think is pretty attractive valuations. So the main advantage of the permanent capital vehicle is that we're not forced to liquidate without attractive exit options. We also think this helps us align our vision better with entrepreneurs. Most entrepreneurs are in this for the long haul, and I think they appreciate a partner that will also be along for that journey with them. And we think that can help us align with entrepreneurs and win deals. And then also, you know, I think there really are sustained opportunities for 5, 6, 7, 8 years to really create value. We're a very hands-on investor and we want to be a part of creating that value. Another related reason where the permanent capital vehicle helps us has to do with capital allocation. So OBOR we're continually raising capital. We're targeting to raise once a year. And what that allows us to do is we can adjust our capital allocations on an ongoing basis. So again, compared to your typical investor, you go out and you raise $100 million, 20% of that is gone in management fees. And then you say, okay, I'm going to invest 50% in first-time deals. I'm going to deploy that capital over 4 years, and I'm going to target 30 different investments. And then the rest is held back for follow-on reserves, whatever it is. In these markets, because deal flow can be sporadic, we think it's incredibly hard to make that sort of an allocation with any sort of accuracy. So because we're a permanent capital vehicle and because we have ongoing capital raises, what it allows us to do is target the absolute best opportunities, whether that's within our portfolio, whether that's new deals. If for any reason, it's certainly not the case now, but if for any reason we don't have a very strong pipeline of opportunities, we don't have to raise so much capital and we avoid diluting the existing shareholders. So we think this gives us a lot of flexibility that is really crucial in these types of market where opportunities exist, but they can be sporadic. Another unique thing is that we're very, very hands-on with supporting our portfolio companies. So just like every other investor, we of course offer strategic advice. We sit on the boards, we're going to make connections to people within our network, but we go a step further in actually providing functional support. So examples of that are we keep the books for several of our portfolio companies. We go and fight with the tax office on their behalf. We run digital marketing campaigns. We actually have a team of developers that we manage. They're based out of India, but they've been working together for a while and we've been managing them for a while. And so any of our companies that have a technology component, we can do a bit of product development. One example is we have a waste management company and we just bid and we actually just won a license to do the collection for Phnom Penh. And so I was the one that put together that financial model, and I'm learning how to, optimize truck routes and collection schedules and things like this. And going into that, that's something I have zero experience with, But I think if you're a generalist and you're willing to get into the weeds a little bit, you can have pretty good results. So the obvious advantage there is it helps our portfolio companies. And quality, you know, if you started a company in Silicon Valley, you're probably not going to deal with doing the payroll yourself, and you've got good lawyers you can trust and things like this. And they're relatively affordable and they're relatively easy to find. That's not the case in a lot of these markets. And so we're able to step in and provide that. So obviously that, that helps the portfolio. Now, and able to do that, we need a big team. We have 11 people, and relative to our size, that's very large. And we have plans to make more hires as well. So in a traditional fund structure, our size of an investment vehicle cannot support that size of a team with your traditional, 2% management fees. So what we do is we actually charge service fees from the portfolio companies. Now, we do recognize that there's a bit of a conflict of interest there. We are, essentially taking money from our shareholders, investing that into portfolio companies, and they turn around and give us back some of that money. We're incredibly transparent about that. We try to be very, very granular in the services that we provide. So for example, if we say we're going to provide digital marketing, it's going to cost $1,000 a month. That allows the portfolio companies to go out and evaluate using a third party or evaluate making an in-house hire. And that's never happened yet. I think we provide good service at a good value, but we are aware of that. And so that's how we address conflict of interest. They're building out a good team, it won't happen. That's kind of how it's designed. Another kind of unique thing that we do, as I referenced earlier, is that we will launch our own ventures. Because we provide this level of functional support, we have a lot of internal capability. So if we have strong conviction about a certain opportunity, for whatever reason we like it, there's good synergies within the portfolio, maybe there's a connection to one of our shareholders. For whatever reason, we decide we want to start our own company, we can do that. So typically what we'll do is, we'll put together a business plan, financial model, develop a minimum viable product. If the business model relies on partnerships, we can go out and establish those partnerships. And then we recruit people to come in that, we call entrepreneurs in residence, but they're essentially co-founders or CEOs to really pick it up and lead this thing and get it going. So what that allows us to do is, one, we have access to proprietary deal flow. And as I mentioned, deal flow can be sporadic. So not only do we create our own, we're the only ones who have access to that. We can get in very early at very attractive valuations. And one of the things that I think is pretty important in this sort of a context is we can have very early alignment with entrepreneurs. So in this sort of a context, which is usually entrepreneurship here is very multicultural. So within OBOR, I'm from the US, Christophe is French and Cambodian, Shivam, our executive director, is Indian. We've got Britt on the team, our current entrepreneur in residence is French. And then of course we have lots of Cambodians. And same question, same situation with a lot of the entrepreneurs we talk to. It's a pretty wide mix. There can be very different conceptions about what entrepreneurship means. What is the level of commitment? What is the vision for the company? How long are we going to be invested? Where are our exit opportunities going to come from? Are we going to scale regionally? When is that going to happen? All of these different things. If you don't have early alignment, they can lead to challenges down the road. And so we feel that when we start our own ventures and we're the ones who recruit and work with entrepreneurs on an ongoing basis, that really helps us align well and avoid potential hurdles down the road. Won't spend too much time on this one, but this is really just to emphasize the level of hands-on support that we go to. I already gave several examples. We're represented on every single board of every company we invest in. Oftentimes, OBOR has 2 board members, and we're helping out with fundraising, building different KPIs, thinking about incentive structures, not just for the senior management, but for the entire team. A big focus on HR and interviewing people and going out and finding candidates, which again, we feel is a competitive advantage. So I'll go through our existing portfolio. I'll try to go fairly quickly and leave some time for questions. But Gaia is the waste management company that I referenced. So Gaia operates in 4 cities in Cambodia right now, and we were just awarded the license in Phnom Penh. We're going to execute that opportunity through a joint venture with a company out of Singapore. Really impressive company, super efficient, use every single piece of the waste stream, and then also just their internal efficiency and the technology they use to optimize their operations is really impressive. So we're excited about this partnership. They bring all of that efficiency and technology to the table. Gaia brings a 12-year track record of operating in Cambodia, knowing how to hire and manage 500 people, how to deal with the what can be unique challenges of waste management within emerging markets where there's not great infrastructure a lot of times, dealing with authorities, things like this. So this is the biggest thing we're working on today, but in the future, we feel that we are very well positioned to take a lead in what's really a wide open waste management industry in terms of waste to energy, in terms of recycling, in terms of industrial waste management, wastewater treatment, things like this. It's pretty wide open. We think Gaia already had a pretty good position to be able to take advantage of that, but I think this partnership just takes it to the next level. So it's, the partnership right now is only focused on Phnom Penh and doing the collection in Phnom Penh. But we've already been approached by a lot of people, and we think they are a good partner to help us launch some of these other projects. KWSH stands for Khmer Water Supply Holding, and this is really a consolidation play. So within the major cities in Cambodia, water treatment and distribution is handled by the government, but beyond those major cities, it's all private. So there are over 400 private water operators in Cambodia, and most of them are in rural or semi-rural areas, and they're kind of run informally as family businesses. And you can imagine, for example, how difficult it is to find good engineering talent in rural Cambodia. And so the idea behind K-Wash is that it's a consolidation play. And so there's a holding company based in Phnom Penh that has good engineers, good accountants, good marketers, good strategic management that's thinking about KPIs and implementing technology to manage the team and monitor consumption and things like this. It also brings access to finance. And what the holding company does is then goes out and acquires existing water stations. It takes 2 to 3 years, but typically after we invest, we will apply all those resources at the holding company and typically invest more money in building out the infrastructure. And because we're able to run these water stations more efficiently and more profitably, we can afford to build out the pipeline network. And so typically, again, it takes 2 to 3 years, but typically we'll end up doubling the amount of households and businesses that are connected to clean piped water. So we have 5 stations right now. We're in the middle of an ongoing fundraise. And actually this slide has become outdated because we'll probably end up raising somewhere between $10 to $13 million to go out and fund further expansion. So we're really excited about this. The social impact on this one in particular is really great and really obvious. So we've had a lot of impact investors interested. We've taken advantage of some grant funding to make connections to people who would otherwise be marginally profitable. And so we're able to not only just create a lot of really great social impact, which is fantastic, but we've also been able to leverage some very cheap concessionary capital that has been able to help. So this one is very exciting. Cambo Ticket is an online ticket booking platform for mainly buses, but also private taxis, ferries, things like this. Cambo Ticket has obviously been impacted by COVID. A lot of the bus companies aren't running as frequently. Some of them have shut down. Luckily, we just raised capital right before COVID from Wing, one of the largest digital payment providers within Cambodia. So we have a very manageable burn rate, we have a very manageable runway, and are really focusing on building out the technology. So not only is there a front end for consumers to purchase tickets, there is a back end that allows these bus companies, and we're even talking with people like movie theaters, for example, to manage their ticketing inventory and change prices and issue invoices and set up digital payment and have barcodes on their tickets and things like this. So we're really focused on developing the technology now. We had very good interest before COVID and licensing some of that technology. We continue to have interest. So certainly the cash flow has been impacted, but we still believe Cambo Ticket is in a really good spot. Deli Shop, on the other hand, has been positively affected by the pandemic. So Deli Shop is an online grocery delivery platform. It is the market leader within Cambodia, but that being said, the market is very, very early here. So still tons of room for improvement, huge room for organic growth. And then there's also some exciting opportunities like expanding into other e-commerce verticals. So we think consumer electronics is a good one. We think household goods, so like kitchenware, pots and pans, appliances is kind of a natural extension of groceries. We think there's subscription services available for things like baby care and pet care, as well as there's some B2B opportunities. So still very early. Right now we're focused on organic growth. There's been a surge of demand. And so we're doing everything we can to expand our operations, expand our management team, streamline the technology. But in addition to that organic growth, we do think there's some additional growth opportunities. Shop Runback is a company that focuses on reverse logistics. So when you order something online, a shirt or something like that, you get it, it doesn't fit, and you want to send it back. They have a software solution to help manage that process, as well as a physical solution to help manage that process. Shop Runback is a bit of an outlier within the portfolio. So we got involved with them because the founder lives part-time in Cambodia, and there was big plans to expand within Southeast Asia. They actually ended up having a lot more traction within Europe. And so that is the main focus of the business today. There's still opportunities within Southeast Asia, but the bulk of the business is in Europe, France specifically. So it is a bit of an outlier. They have, one of the good things about having a lot of the operations in France is that they've been able to take advantage of a lot of the subsidies that are a part of the French government's COVID relief package. They've unlocked a lot of grants for innovation, which has to do with implementing this technology. So still an interesting company, but more focused on Europe at the moment. Animal Doctors International, this is our latest investment. We actually just closed it in December. This is a chain of veterinarian clinics with one clinic in Laos, 2 in Vietnam, and then they are working on opening their 3rd in Vietnam. So that'll bring the total up to 4. And then the plans are we'll get up to 5 by the end of 2021. This is really a play on this emerging consumer class that has more disposable income. They're changing attitudes and really treating pets as members of the family. And they're also more aware of what proper pet care entails. So really good margins right now, really strong organic growth, same store growth, we think for 2021 is going to be 33%. And then also, a huge expansion opportunity that's really just kind of, repeat. They've proven they've been able to do it, been able to recruit and train good veterinarians. There's economies of scale in all of their back-end processes. So in terms of ordering equipment and pharmaceuticals, in terms of their training, all of their software and organization, all the back-end processes should benefit from economies of scale. in addition to this, and I didn't know this, I got to know as I was doing due diligence on this one. But ADI is involved in pet travel. And so when it comes to bringing pets across borders, there's a huge amount of regulation and insurance, and you need to maintain your medical records, as well as just the physical part of it. So physically putting them on a plane or a train or a bus or a car or whatever it is, having all of those physical services to go along with the paperwork is a huge ordeal. It's incredibly fragmented, and there's a big market for that. So ADI has some pretty good exposure to that, which is just one more reason that we really liked this opportunity. So what we are focused on right now, as I mentioned already, with Gaia, K-Wash, and Animal Doctors, with Gaia, we're raising capital to finance this new Phnom Penh license, as well as I mentioned, industrial waste management, recycling, waste to energy, very good opportunities, several of which will need a decent amount of capital. KWSH, I mentioned, this is really just continue, we feel that we've kind of established a track record there. We're continuing to build out the management team. We're very happy with where it is. And now it's just about replicating our business model. Because one thing I forgot to mention earlier is that because KWSH, it works within water. So we have monopoly long-term licenses, 20-year licenses, very, very steady demand. We've seen consumption per household actually increase during COVID. It's very well suited for debt. And so we feel that after this ongoing equity injection, they should be able to scale pretty extensively through leveraging a lot of debt, which is just upside to the equity holders. So we're excited about that one. I just touched on Animal Doctors, ADI, and then we do have somewhat of a proprietary opportunity to invest in a financial services firm. Very good management team, very good technology, and in terms of being able to acquire customers efficiently and cheaply. And they need additional capital to be able to go out and expand. And we think right now, given where the market is with COVID, there's a lot of investors who are maybe not aware of Cambodia, or maybe they don't have liquidity right now for whatever reason. We think this is a really good opportunity to come in and get exposure to what we think is a small but one of the best quality financial firms within the country. So that's what we are looking at right now for 2021 to be able to execute only those opportunities. We're raising $6 million, and of course we expect more opportunities will come along. So that, for the most part, is it. I feel like I've been talking a lot, and I'm trying to go quick to leave the room. Yeah, I'm sure we can find a way to distribute this debt, stop and open it up for questions.
Good, thank you. Thanks, Andrew. I know that was a very comprehensive presentation, both on the geography, the work, interesting work that you're doing, and as well as the deal flow. So we'll open the floor to the questions. So please keep typing your questions in the chat box, or if you would like to ask a question, please unmute yourself and ask Andrew the questions here.
Yeah, Chris Eddy, Andrew, how are you? Just who have you approached in the main markets? So, have you done sort of dog and pony shows in Europe and US? What have you done so far?
Well, thus far, all of our shareholders are high net worth individuals, mainly Europeans, but that have lived and worked in Cambodia or in Southeast Asia. And so they kind of understand the opportunity, they understand the risk, and they understand why fairly unique structure is necessary. But now, as we can continue to grow and as the opportunities within the portfolio get larger, we've been talking with more institutional type investors. So that's a big part of this Dog and Pony show. So we're speaking with mainly family offices. We've spoken with a couple of DFIs. We continue to speak with high net worth individuals. But really, we're casting a wide net. I think investors who are located within Asia Pacific, that's always a good route for us because I think they understand the opportunity a little bit better. But that being said, we're speaking with people in the U.S., Europe, Latin America. There's a lot of Japanese and Korean money as well. But for the most part, casting the wide net, we feel, given our structure and given our vision for really long-term value creation, that does lend itself well to family offices who also presumably have a very long-term investment horizon.
Could you return to the slide where you had your peer review in country?
Definitely. And I need access again to be able to share my screen, please.
Sure. Yeah, please try now.
Okay.
Okay. So your is that Delta out of Dubai there? That Delta Capital out of Dubai?
That is, their name is Delta Capital Myanmar. I'm not sure where they're domiciled, and I don't know where their money is coming from. But they do, they maintain a physical presence in Myanmar.
And are they in telco deals, basically?
I'm sorry, what's that?
Are they in telco deals, in data and...
Yes. Yeah, that was their latest investment.
That's right, okay. Jeffrey, that's Delta out of Dubai. Okay, so... And it would just comment on these other fellas just for me, please.
Well, more familiar with the ones in Cambodia because I've been able to, personally go out and meet them. Smart is that's essentially the kind of the corporate VC from the telco out of Malaysia. First time funds, early stage, only $5 million. They're doing tech-focused early stage investments. I think a portfolio of maybe 10 companies so far. I think it's a mixed bag, but it's very early for them. It's early for us too. Belt Road Capital Management. This is essentially the investing arm of a Chinese family. And this is their exposure. They do invest throughout the region, but the main focus is Cambodia. It's a little bit different than us, but they did kind of start with an advisory arm. And so I'm not sure how much overlap there is between the advisory services and the investment side of things, but they do have some internal capabilities. They're more focused on kind of, I guess you could say, corporate finance type stuff rather than the more operational stuff that we're focused on. But they do have some internal capabilities. I don't know how much they apply to their portfolio. But they represent a single family out of China, $50 million. They've been around for, I want to say, 5 years, and invest mainly in Cambodia, but also throughout the region. EMIA, this is their third fund. And they didn't quite get to 125. They're at 120. But they are domiciled in Singapore, investing throughout the region, and they are exclusively backed by DFIs. So they've been in the market the longest. Sector agnostic, but it's a lot of your traditional brick and mortar type stuff. And then over in Myanmar, and again, I'm not quite as familiar with these. Both Seed Myanmar and EME are very, very new and very early stage. Both of them maintain an exclusively technology focus. And I should say it's I don't think it's necessarily machine learning and building robots and things like this, but it is tech-enabled solutions, which is often the case in these markets. And I think it's a pretty good focus. We don't do that because, again, I referenced the deal flow. We think maintaining a narrow focus can be tough to execute, and you can end up maybe chasing some deals and maybe stretching on some valuations. But nonetheless, that's what they've done. Again, both early. I know some of the people at emerging market entrepreneurs, they seem good, but it's still kind of too early to, I think, comment on track record.
What size is that?
What's that?
What size is that particular piece?
I'm not sure. I don't know. If I had to guess, I would think both are below maybe 20 to 30 million, but I really, that's a pure guess on my part.
Okay.
Anthem Asia is an impact investor. So I think they've kind of evolved how they define impact over the years. I think there's some gender lens to it, but now at this point, I think it's a pretty broad definition of impact. They've got $35 million. We touched on Delta. Seems like you know more about them than I do. But yeah, their latest investment was a fairly large telco deal. And then there's Ascent. And I actually don't know a ton about Ascent.
Okay. Thank you.
Sure.
Awesome. Thanks, Chris. We have a couple of questions coming through. So I think, so Andrew, the first question is, so how does your distribution mechanism work? So you mentioned about the permanent vehicle structure. So is there an option for investors to request funds after a certain lockdown period? So just help us brief about how the distribution mechanism works.
Yeah, absolutely. And we've got a board meeting next week where we're going to finalize a lot of the procedures. So I won't get too much into the details, but that is a big focus of us because we're a permanent capital vehicle. We understand that we do need to sort of manufacture liquidity for shareholders that want to exit. So of course we pursue normal exits, normal liquidity events within the portfolio. Whenever that happens, we do have a dividend policy where we're paying out shareholders in priority. So one is reserves for operating the vehicle. For any shareholders that wish to exit, a portion of those proceeds will be reserved for them, and then the rest will be distributed as dividends to the rest of the shareholders. And then we also have a policy that is around essentially share buybacks. So if there are shareholders who want to exit, they can kind of name their price. We have various valuation metrics that we use, and then it's a vote amongst the board and the shareholder representatives of if we want to use capital to buy those shares. Again, we're cementing the details, so I don't want to get too much into the technical components of that, but maybe in one-on-one calls or a little later down the line, happy to go into the details with it.
Perfect, thank you. I think on the similar lines, there's another question on what is the effective LP GP profit share? So I presume the model is 2 and 20 for you, similar to other funds, or do you have any specific structure out there?
Yeah, again, it's a little unique, and on this call, don't want to get into the details too much. But essentially, what we have is you have your operating cost. So all of the management team is part of OBOR Capital, and we actually think that's beneficial because you're not investing just in the investment holdings, but you are investing in all of the future opportunities we bring, all of the hands-on support that we provide to the portfolio. That's part of the value of OBOR Capital. So all of the team is part of this same investment vehicle. So essentially, instead of management fees, 2%, you can think of operating costs. Instead of carry, you can think of there's a bonus pool. And again, maybe in one-on-one conversations, happy to go through all of those details. But we are aware of our competition is doing the 2 and 20. So we know we need to be competitive with that. And then additionally, as we continue to raise more and more capital over the years, and as OBOR capital continues to grow, we'll realize economies of scale. So just by nature of that, our operating cost relative to the amount of funds that we're managing is going to go way down. I hope that's somewhat of a clear answer. And again, happy to address all this stuff. I just don't want to get too far into the weeds in this venue. But in a one-on-one conversation, happy to go through the details.
Absolutely, thank you. This is both a comment and a question from Standard Fund. So their fund invests in larger branded consumer tech companies, and they're a very big player in China, Korea, Indonesia, Malaysia. And they're very much interested in building out the presence in Myanmar. And so their question was, do you have the scope to structure transactions with the US and Europe-based players to seed new businesses in Cambodia and Myanmar? So yes. It's more of a structure, that you have in place, to take the foreign investments into the fund as well as into the region.
Yes, yeah, absolutely. I should mention that we do manage one SPV. So there is one investor. He wanted exposure to part of the portfolio, not the rest. We had some very good opportunities in front of us, and so we did set that up for him. So we do have that capability. We feel that, especially for people doing it for the first time, they can be very hesitant on how to structure things, how to optimize for tax, what are the legal components to foreign investment within Cambodia, what are the tax implications of repatriating capital, all of those things. I think when you invest in anyone, especially in markets like Cambodia, Myanmar, it's crucial to have a local partner. And that's something we're familiar with, and we can certainly help structure those transactions.
Awesome, thank you. So the next question is, I think you briefly mentioned that there is some leverage to be added into your portfolio company. So how are you finding the opportunity for debt markets in the region and also for the investments that you do?
So it is available, but it can be expensive. It's getting better. It's getting more available, and it's getting cheaper. Traditional banks in Cambodia are very much focused on collateral-based lending, and even that collateral, it kind of needs to be real estate, and so that's really challenging. So what we've done for, especially because foreign-owned entities cannot own land in Cambodia, but some banks are more and more flexible. I'm speaking with a local bank right now. I think we'll secure $3 million for this waste management contract. But that being said, we also got a term sheet from a lender out of Singapore for $3.5 million at an incredibly cheap rate. So we do like to source foreign debt. Sometimes that's not available. And one other source that we tap is this kind of impact debt. So not only is it a bit cheaper, you're talking, 7 to 8% range, it can come in and at a stage that's typically more early than you'd see firms use traditional debt. And that's because for a lot of the companies we have, there's a strong impact focus. And so that's pretty attractive to impact lenders. So just to wrap up, debt in Cambodia is expensive, and it is kind of rigid, but that's changing and it's getting better. And that shift has actually been fairly rapid, but still at the moment, foreign lenders are much more attractive. So that's typically what we tap. And then we do leverage impact debt whenever that's appropriate.
Got it. I mean, I'm actually seeing the similar trends, so the venture debt is picking up in India these days, but like if you talk about venture debt or opportunities of debt into the startup community, like 5 to 10 years ago, it's expensive. I think I'm sure like Cambodia will bridge that gap and will reach the market in the shortest possible time frame. So the next question is obviously from an investor. So they are asking.
Sorry, I just Great comment, and it did remind me. We are seeing a lot of lenders and foreign lenders get creative and with venture debt in terms of mezzanine. We use a lot of convertible debt, and other people are open to that as well, and some revenue-based financing as well. So just wanted to throw that out there, that is an option we're seeing more of, and I think it is a fit for certain business models.
Yeah, RPF is picking up a lot. I'm seeing that in India and Southeast Asia. Yeah. So the next question is, do you consider co-investment models with other investors? I presume like the answer is yes, but I'll let you answer.
Yes, yeah, that is. I think for our early stage stuff and the stuff that we incubate, to justify our level of involvement, that does involve larger stakes in companies. But at some point, no, we definitely need to bring in outside investors. It's we want to be invested in these companies for a while, and our on the upper side of our check size is about $2 million, and so we're certainly open to co-investors. I also should note that in addition to family offices, we've been talking with a couple of corporates in terms of fundraising, and they are interested, of course, as a vehicle to create wealth, but also as a kind of a source for deals. And so we do have a co-investment policy amongst our shareholders. So, if they really, really like a deal and they want additional exposure, we do have a policy around that.
Sweet. Okay. So, the next question is, I know we are at a very nascent stage with regards to the exits, but where do you see the larger exits going forward, or exits happening in the market? Is it going to be the MNCs, larger PE, domestic capital market, or anything else?
Yeah, I think it's going to be, I think for now, so 3 years, I think it's definitely going to be strategic buyers and the larger PE firms within the region. Again, I think just like for us, deal flow can be scarce. I think it's absolutely the same when you get into the growth stages. And so there's more and more capital allocated to these regions. And I think that's, if we can present really well-run companies with proper governance, proper financial management, a clear path to growth, a clear financial strategy, those are going to be attractive options for the regional PE players. So I think in the next 3 years, strategics and regional PE. But I think if you look what's happening in Vietnam right now, if you look what's happening in Indonesia right now, certainly Singapore, a little bit Philippines, you're seeing really, really big exits through whether it's just these massive private equity buyers or foreign listings on foreign exchanges. And so really we're building for the long term. It is a bet. It's a bet on the future. All venture investing is. But we think not only will kind of the venture scene continue to evolve, we think our exit options will continue to improve in the future.
Sure. We have 2 more questions and we'll wrap. So how is the current political situation in Myanmar, affecting your ability to execute deals? Are there any concerns on property rights, any concerns with regards to the property rights?
Within Cambodia, no, not at all. Within Laos and with Myanmar, no, not at all. I'm sorry, within Laos and within Vietnam, not at all.
No, I think the question was more geared towards Myanmar at the moment.
Yeah, within Myanmar, I think it's too early to say. I wish I could give you a better answer. We have been speaking with other investors we know there, and they're all kind of saying the same thing. We don't really know. I don't get the feeling that the military government wants to turn off foreign investment. I think they want to do anything they can to keep foreign investment coming in. So I don't think there's any concern about that. I think the main concern is just really disrupting the business environment. So harming the operations of the companies. But in terms of property rights, things like this, I don't think so. But that being said, I think it's too early to say. And I think there are better people than me to answer that question. I do think it really, really highlights the need for an on-the-ground local partner who really knows these markets. So as I mentioned, from a business perspective, from an opportunity perspective, we really, really like Myanmar. We would never enter Myanmar without an on-the-ground presence that includes a lot of local people who are very plugged in.
Awesome. Okay. Last question. I think we are running out of time. So what sectors are you seeing getting most traction and innovation in both in Myanmar and Cambodia?
Financial services is definitely a big one. And you look at scale. I mean, these are both fairly small countries with fairly small economies, but you can achieve really good scale within financial services. I think within a lot of the infrastructure, so not necessarily telcos or dams or highways or power plants or anything like that, but really kind of the technology infrastructure to run an economy. So that's consumer platforms, it's B2B platforms, software and services built around logistics, and payments and financial services. I think that's gotten a lot of traction. I really like B2B marketplaces. There's others I know that I'm missing, but I think that's one of the ones we're most excited about.
Absolutely. Good. Thank you. Thank you so much. So I think on that note, thanks everyone for joining today. So in terms of next steps, what we will do is, we will share the recording as well as the details of Andrew and the team via email. So if you have any interest, please reach out to Andrew and the OBOR Capital directly. And once again, thank you so much and have a wonderful day, afternoon, and evening. As I said, good morning, good afternoon, good evening. Yeah, thank you so much. Thanks, Andrew and Max, for the opportunity as well. Thank you.
Great, Karen. Thank you. Thank everyone else. Look forward to being in touch.